Section 4. Finalize the purchase plan, buy, track, and sell assets, and record trades. The goal in this section is for us to document reasons for an asset purchase, buy assets, stay informed about those assets, sell the assets, have a spreadsheet that shows trades, targets, spot checks of asset prices, money planned to be made, and money actually made. The goal is for you to learn how to distribute an investment budget over a budget line or portfolio segment and across accounts. Lecture 6. Finalize purchase plan and reasons for the crypto crashes of 2021. In this lecture, you will see the purchase plan finalized and learn reasons for the crypto crash of May 2021 and the crypto crash that began in November of 2021. This lecture begins and ends with causes of price movement. Common to both the stock market and the crypto market, demand and supply causes prices to move. As demand increases, price increases. As demand falls, price falls. A higher volume of sales than purchases of stocks or cryptos shows an asset is not wanted and its price decreases. A higher volume of purchases than sales of stocks or cryptos shows an asset is wanted and its price appreciates. Demand for a cryptocurrency can hit a wall of fixed supply. When there is more demand than supply, the price of that asset should appreciate. Demand for a cryptocurrency can also hit a wall of reduced supply by way of coin burning, the act of sending cryptocurrency tokens to an Ether address wallet that has no access key, making them lost forever. Printing more money has an inflationary effect. Reducing the supply of a currency, such as burning crypto coins, has a deflationary effect. Launching products or services and updating products or services with new models, versions, can cause price rises. Improving blockchain technology causes the price of a crypto project to rise. For example, the updating of Ethereum to 2.0 has caused the price of Ethereum to rise. Cardano successfully launching smart contracts on its blockchain's testnet, a version of the blockchain network that is used to experiment with new functionalities before being implemented on the mainnet, caused its price to rise. News causes price appreciation and depreciation for both stocks and cryptos. News can come from anywhere and can be about so many things: the product or service, the organization, the industry of the organization, government, laws, and regulations. While the stock market is country specific, for the most part the crypto market is international with different regulations in different countries. For example, in early 2021, some foreign crypto traders had access to more leverage than U.S. traders did. It was not until early third quarter 2021 that the exchange FTX cut its leverage limit from 100x to 20x. The exchange and derivative trading platform BitMEX also allowed 100-to-1 leverage for crypto trades. Ownership. With stocks, it is important to look at ownership. For example, the number of institutional investors or the mutual funds and or exchange traded funds that contain the stock. With cryptos, look at what the billionaires such as the Winklevoss twins Cameron and Tyler and investment companies such as Grayscale are doing. Retail traders with 7 to 13 months long positions on stocks and cryptos with less than $15,000, as is the case in this course, are not the only player types in either market. There are those who can take long and short positions and even manipulate markets for certain cryptos, even the markets for Bitcoin. On this slide, I put news about the stock markets, spot and derivatives news. Spot refers to immediate purchase, payment, and delivery of an asset, whereas derivatives refer to futures contracts, forwards, options, swaps, but not exchange-traded funds, ETFs, unless they are leveraged or inverse ETFs. An inverse ETF is constructed by using various derivatives to profit from a decline in the value of its benchmark or index. Investopedia says the inverse ETF should not be a long-term investment because its underlying derivative contracts are bought and sold daily by the fund's manager. An inverse ETF should be profitable when there is a price decline for its benchmark or index. For example, the S&P 500 index. An inverse ETF can be a less costly substitute for short selling. There are also double and triple inverse ETFs that magnify returns when a market is falling. Should a firm offer a stock or crypto inverse, double inverse, or triple inverse ETF, know the prospectus and how easily it can be enforced by an outside regulatory agency. Another note on derivatives. Given the derivatives market of options, as a stock market trader, I can look to the put-call ratio to see if the market for my prospective asset is bearish, based on whether there are more puts, right to sell, than calls, right to buy. Or if the market for my prospective asset is bullish, based on whether there are more calls, right to buy, than puts, right to sell. More stocks than crypto assets are present in pre-retirement and retirement investment portfolios. Cryptocurrencies are a very small percentage in these portfolios. I've not yet seen a wealth advisor recommend more than 5% be in crypto. Before cryptos, there was the accepted portfolio management division of 40% bonds, 60% stock. After cryptos, 1% could be taken from bonds for a 39/60/1 three-way split, or 40% bonds minus 3% equals 37% bonds, 60% stocks minus 2% equals 58% stocks, to reallocate 5% to cryptos. And maybe, only for a short period of time, the 5% crypto section can be composed of 1% Bitcoin, 3% Ethereum and Polygon, and 1% other, maybe Solana. Recall, risk tolerance. Here, those who recommend no more than 5% crypto are using a conservative risk tolerance, while anything higher would be moderate or aggressive. if investment allocation for crypto increases, demand for and purchases of cryptos would increase. Then market capitalizations for crypto assets would increase. As market capitalizations increase, price predictions for quality cryptos would increase. So, adoption and lack of adoption of cryptos as instruments for investments are price determinants. Look for macro events and tipping points when investing. Market sentiment is the general prevailing attitude of traders and investors as to anticipated price development in a market. The attitude is based on fundamental and technical factors, economic reports, and more. Market sentiment for stocks can be seen in a price chart that plots two simple moving averages. A simple moving average, SMA, appearing twice on a price chart. The 2.5 months, 10 weeks, 50-day SMA, and the 10 months, 40 weeks, 200-day SMA, the slower moving average as compared to the 50-day moving average. When the faster SMA crosses above the slower SMA, that is a golden cross, indicating momentum has shifted to a bullish condition. When the faster 50-day SMA crosses below the slower 200-day SMA, that is a death cross, showing momentum has shifted to a bearish condition. Now, on the slide below the line, we are going to discuss causes of price movement not common to stocks and cryptos. The stock market monitors the earnings of companies. The crypto market does not explicitly monitor and reward earnings from quarter to quarter. The crypto market had been dominated by Bitcoin by as much as 96% in February 2017, but has been less than 50% since late April 2021 through the end of 2021. I would say dominance means 51% plus. The stock market reaches the dominance of 51 plus not by looking at one high-cap stock or by one high-cap sector. Dominance is reached when top sectors are combined. 1. Information technology, the largest. 2. Consumer discretionary, the second largest. And third, either healthcare, financials, or communication services. Either of those three would put us over 51%. Bitcoin is a commodity as determined under the Commodity Exchange Act, CEA. Commodities are traded on commodity exchanges, mainly through futures and options contracts. Hence the creation in the U.S. of a Bitcoin futures ETF before a Bitcoin spot ETF. We hear about futures contracts expiring every month. Also, the stock market is comparatively less volatile and less risky than the commodity market is. Lastly, inflation of fiat currency can cause investment funds to flow into Bitcoin with the somewhat unjustified belief that Bitcoin holds its value better than fiat currency, say the US dollar, with its diminishing purchasing power against real-world price hikes. The S&P 500, the US dollar, and gold have not dropped by more than 30% twice in less than 12 months, as Bitcoin has. April to July 2021, minus 53%. November to December 2021, minus 32%. November 2021 to January 2022, minus 38% plus. All within 12 months of April 14th, 2021 to April 13th, 2022. Finalize what to buy, how much, where, and when, and finalize when to sell. We have selected blockchain stocks and crypto assets. We've let some time pass as we researched our prospective purchases further. This is our time to finalize our thoughts before putting money forward in our investing simulation. Want to buy sheet, NVIDIA. I like NVIDIA because it manufactures graphics processing units, GPUs, which are needed for mining computers for proof-of-work blockchains such as Bitcoin, Bitcoin Cash, Ethereum Classic, but as per Investopedia, not Litecoin, which relies more on memory than GPU computing power. In 12 months, I want to make 12% or more with a blockchain stock pick. And I think I can do that with NVIDIA stock. If the high-low average price of analysts' target prices held from June 1st, 2021 to June 2022, the share price appreciation would be 12% or better. Want to buy sheet? Amazon. I like Amazon because its projected EPS growth 2022 versus 2021 was 47.9%. And its industry, internet and direct marketing, retail, projected EPS growth 2022 versus 2021 was 77%. In 12 months, I want to make 12% or more with a blockchain stock pick. And I think I can do that with Amazon stock, even though blockchain revenue is a minuscule percentage of its revenue. So it will carry a lighter weight than NVIDIA. If the high-low average price of analysts' target price is held from June 1st, 2021 to June 2022, the share price appreciation would be 12% or better. Want to buy sheet? Ethereum. I like Ethereum because it ranks number 2 in market cap. It is a platform and not just a currency. It has a WISE overall rating of A. Bitcoin's overall rating was A-. Ethereum's WISE market performance grade is A+. It has the highest 30-day protocol revenue and total revenue numbers. Its blockchain has the highest market share in the decentralized exchanges, DEX, and in the decentralized finance, DeFi, ecosystems. Based on analysts' high-low average price forecast, it should be able to appreciate more than 50% from June 1st, 2021 to June 2nd, 2022. Want to buy sheet? Polkadot. I like Polkadot because it is an interoperability and a scaling solution. It had one of the highest symmetry core team scores, 8.5. It had one of the highest WISE market performance grades, A+. It can do 1,000 transactions per second and 100,000 plus with parachains, parallel processing chains. Based on analysts' high-low average price forecast, it should be able to appreciate more than 50% from June 1st, 2021 to 1 year later. I do not like Polkadot because its 30-day total revenue is only in the thousands. Want to buy a sheet? Bitcoin. I like Bitcoin because it ranks number 1 in crypto market cap. It has the highest symmetry market opportunity and token performance scores, 9.8 and 8.4 respectively. It has the most addresses with a 7-day average greater than $1 million, and it has the most transactions greater than $100,000 in 7 days. Based on analysts' high-low average price forecast, it should be able to appreciate more than 50% from June 1st, 2021 to 1 year later. Bitcoin is one of my least preferred assets because it is not a reliable hedge against inflation. When needed, it could be devalued more than 30%, more than the stock market, gold, or even a country's fiat currency. Its transactions per second, TPS rate, was lower than Visa's TPS rate, which showed Bitcoin is not ready to take on such scale. Bitcoin is not easily divisible like fiat money is divisible. Instead, for example, 100 US dollars may equal 0.00191534 Bitcoin. There are no stock split equivalents, crypto splits, for investors in the Bitcoin market. It uses increasingly more energy per transaction than other cryptocurrencies. Each Bitcoin used for payment, for example a Bitcoin credit card charge, could be a capital gain or loss over the approximately $40,400 capital gains threshold, a taxable event. So, how are we going to treat wanting exposure to Bitcoin or any asset that does not meet all of our preferences? Allocations for such an asset can be set to the lowest percentage in the portfolio segment. If it is 0%, in effect, it becomes a watch list item with no financial exposure. Want to buy a sheet? Uniswap. I like Uniswap because it brings in more total revenue than Bitcoin does. Its symmetry underlying technology score of 9 is higher than Bitcoin's score of 8.3. But I do not like Uniswap because its symmetry, overall grade, core team, token economics, and roadmap progress scores are less than the minimums set. Although it brings in more revenue than Bitcoin does, it is not a stock where that is highly valued. It is a crypto where that is not highly valued as a determinant of price appreciation. Based on analysts' high-low average price forecast, it may not be able to appreciate more than 50% June 2021 to 22. Chainlink and Tron were eliminated also because, based on analysts' high-low average price forecasts, they may not be able to appreciate more than 50% in the same time period. I am not adding Solana to the buy list because from research date May 5th, 2021 to purchasing date June 1st, 2021, I honestly did not know why the smart contract platform Solana would perform better than Neo, EOS, Tron, or Cardano. As for Polygon, it did not wow me either with its scores and stats when the cryptos were being selected. It was not the investment set with Ethereum that it is now for me. That was then, but now, and from now, we are smarter and wiser. Let's look at how that concept of the Ethereum Polygon investment set developed for me, and if there is another or other investment sets. We have seen how, at its foundation, Bitcoin's transaction processing speed is not at the highest level. Its less than stellar speed is a barrier to scale. Its speed prevents Bitcoin from making a bid to a business with large transactions. Examples are credit or charge cards transactions, or all of the trades at NASDAQ or the New York Stock Exchange. We have seen how Ethereum's transaction fees are not in the lowest cost range, so its cost is a barrier to scale. Potential business customers could consider a less expensive smart contract platform than Ethereum. As a solution to Bitcoin's slow transaction processing speed, the Lightning Network is a Layer 2 protocol that can be used with the Layer 1 or foundational layer of Bitcoin. Cointelegraph.com reported that when Lightning Labs launched Lightning Network on Bitcoin, it also launched it on Litecoin. Lightning Network is not exclusive to Bitcoin. Polygon is an Ethereum Layer 2 solution. At its website, polygon.technology, this crypto project is described as being a protocol and a framework for building and connecting Ethereum-compatible blockchain networks. It supports a multi-chain Ethereum ecosystem. Aave brought its tokens to Polygon, a Layer 2 solution for Ethereum. Aave transactions can be performed at lower costs on Polygon than on Ethereum. A Kenyan and African at-large blockchain news service, BitcoinKE.io, reported the following information. Optimism is an Ethereum Layer 2 scaling solution that uses optimistic rollups to achieve far lower fees, far lower latency, and far greater throughput versus Ethereum Layer 1 alone. When Uniswap v3 launched on Optimism, the benefits were 1. Speed with security. 2. Gas costs on Optimism were 35 times cheaper than on Ethereum. 3. Optimistic rollups publish state changes to the main chain with minimal inspection and fraud checking, allowing for additional speed. And 4. Uniswap estimates that based on usage stats on the main chain, optimistic Ethereum will offer up to 10 times cost savings. Uniswap v3 became the exchange with the most trading volume. Remember, Uniswap's total revenue is greater than Bitcoin's total revenue. This is the final list of assets for our simulated portfolio. There are 5 assets to purchase with purchase date June 1st, 2021. NVIDIA stock, Amazon stock, and the cryptocurrencies Ethereum, Polkadot, and Bitcoin. There are 2 cryptocurrencies on the watch list, Polygon and Solana. Because this important chart shows our asset appreciation targets, it shows when to log into our brokerage accounts and sell all of a purchased asset. 1. at target price percentage. 2, at flexible target price percentage. Or 3, June 2nd, 2022, the end of the simulation, unless no more than a 3-month extension is needed. 50% of the blockchain stocks and cryptocurrencies investment budget line will go to stocks, and 50% will go to cryptos. NVIDIA will be 30% of our portfolio. By the investment project purpose and procedures document, it's June 1st, 2021 to June 2nd, 2022 12-month target price percentage increase is set at 12%. The flexible target price percentage is 22%. The analyst's high-low average target price percentage is 49 to 53%. Amazon will be 20% of our portfolio. Its 12-month target price percentage increase is set at 12%. The flexible target price percentage adds 5% to the 12% for 17% above buy price. Its analyst high-low average target price percentage is 17 to 43%. With Amazon, will we need a 3-month extension out to September 2nd, 2022 to meet our goal of 12%? Ethereum will be 25% of our portfolio. Its 12-month target price percentage increase is set at 50%. The flexible target price percentage is 60%. Its analyst high-low average target price percentage is 143.32%. Polkadot will be 15% of our portfolio. Its 12-month target price percentage increase is set at 50%. The flexible target price percentage is 55%. The analyst's high-low average target price percentage is 70.28%. Bitcoin will be 10% of our portfolio. Its 12-month target price percentage increase is set at 50%. The flexible target price percentage is 55%. The analyst's high-low average target price percentage increase is 173.67%. Polygon and Solana are watch list entries. Looking at the analyst's high-low average target price percentage for Solana, calculated after the purchase date of June 1st, again calculated after the purchase date of June 1st, Solana did not make the buy list because it was not strong enough in the selection process before June 1st. Otherwise, the price prediction criterion would have put it on the buy list. 5% each could have been taken off of Amazon, Ethereum, and Bitcoin to create a dangerous and risky Solana investment in the face of Neo, EOS, Cardano, and Tron. That would have gotten 15% of the investment budget line. Question: if a stock or crypto has been sold before June 2nd, 2022, should the proceeds be converted to an interest-earning stablecoin? The NVIDIA stock, which pays a dividend of less than 1%, would have the proceeds of its sale moved into the brokerage firm's money market, paying less than 1%, unless we moved the proceeds of the sale to a crypto brokerage firm. The Amazon stock, which does not pay a dividend, would have the proceeds of its sale moved into the brokerage firm's money market, paying less than 1%, unless we move the proceeds to a crypto firm. The 5.5% interest earning Ethereum position at Crypto.com could be converted into a 10% interest earning position in the stablecoin USDC at Crypto.com. The 10% interest earning Polkadot position at Crypto.com could remain in Polkadot, or be converted into a 10% interest earning position in the stablecoin USDC at Crypto.com. The 4.5% interest earning Bitcoin position could have its proceeds converted into a 10% interest earning position in the stablecoin USDC at Crypto.com. All rates are as of January 15th, 2022. All rates are not shown, and rates may change. We know what we are buying. We know how much we are buying by percent of the portfolio. Where are we going to buy the stocks? We know where we are going to buy the cryptos based on the interest that can be earned on an asset. NVIDIA will be purchased at TD Ameritrade because I want to use TD Ameritrade's platform, Thinkorswim. Amazon will be purchased at Fidelity Investments because 1. A customer can buy fractional shares there, and 2. I like the research Fidelity offers. Ethereum, Polkadot, and Bitcoin will be purchased at Crypto.com because I prefer to hold assets where the highest interest is paid on positions rather than lower interest rates or no interest rates. Multiply these percentages times $13,000 and we get this as a result. We can see how much of a crypto asset or stock we are buying by looking at the far right subtotal column. The subtotal row at the bottom of the table shows how much money needs to first be deposited at each brokerage firm in order to place our buy trades. A brokerage firm may require you to sign a form admitting that you are requesting to purchase a high-risk asset. Outside of the scope of this course, I can say when I purchased Grayscale Bitcoin Trust shares, ticker symbol GBTC, at Fidelity Investments, a position I was glad to sell because I prefer the price action from the demand for Bitcoin rather than from the demand for Grayscale Bitcoin Trust shares. I had to sign a designated investment agreement form online, even though the investment opportunity for my account was set at most aggressive. The way we have balanced the $13,000 for the blockchain stocks and cryptocurrencies investment budget line of our $100,000 portfolio is shown at left. 50% blockchain stocks, 50% cryptos. When positions are sold, I will expect the dollar amount of proceeds for the blockchain stocks and cryptocurrencies to be greater than $13,000 because of the price appreciation when we sell. 50% of a $13,000 portfolio allocated to cryptos would indicate an aggressive risk tolerance investment style. However, looking at the right side of the slide, it is 6.5% of a $100,000 portfolio that is allocated to cryptos, indicating a moderate risk tolerance, with moderate being between conservative and aggressive. The reason it is not designated conservative is because cryptos are more than 5% of the whole. From June 1st, 2021 to June 2nd, 2022, the prices of the assets we purchase in this investment simulation are anticipated to grow from low to high. The daily prices can be plotted on a graph, and to help interpret the price plots, other chart information is added as annotation. A price chart can be annotated with indicators, studies, strategies, and more in a variety of ways. And when a way is chosen, it can be saved as a view or study set. TradingView.com is a charting platform for stocks and cryptos. It offers a free subscription. StockCharts.com is a charting platform for stocks. CryptoWatch is a charting platform for cryptos. Its website is https://cryptowat.ch. Your brokerage or exchange may have an excellent charting platform. If not, use a free website that offers a free subscription for your charting work. In this lesson, the TradingView.com free subscription charting platform is used. The view I will now describe is the 50 and 200 SMAs view, using the stock NVIDIA to illustrate. It has a black stock price history line for the 10 months before the June 1st, 2021 buy date. So it goes back 10 months, as you can see along the bottom of the slide. The trade volume histogram shows red vertical bars for days when there were more sell trades than buy trades, and green vertical bars for days when there were more buy trades than sell trades. When there is heavy trading, the vertical bars are high, and when there is light trading, the vertical bars are low. The letter E stands for earnings, quarterly earnings, and the letter D stands for dividends, which are paid quarterly. The 50-day simple moving average, or SMA, is shown in blue. It is the fast moving average. For the stock market, it covers a moving range of average prices for the most current 50 work week days. For the crypto market, it covers a moving range of average prices for the most current 50 calendar days. The 200-day simple moving average, or SMA, is shown in red. It is the slow moving average. For the stock market, it covers a moving range of average prices for the most current 200 work week days, Monday through Friday. For the crypto market, it covers a moving range of average prices for the most current 200 calendar days. An average and a mean are synonymous. Sometimes the prices in the sample for the average act as a support level when prices are falling. Sometimes prices revert to the mean. These are two reasons to include these moving averages on one's price chart. With the moving average, we can see the condition of the asset price. For example, if a price is above a moving average, the price is stronger than its average, pulling up the average. And if a price is below a moving average, the price is weaker than its average, pulling the average down. The chart is showing the trend for NVIDIA stock is upward going into our purchase date. The condition of NVIDIA's stock price is strong because the price is above its averages in the week before the June 1st buy date. Notice the divergence between the 50-day and the 200-day SMA. It got smaller from October 2020 to April 2021. The distance between the two moving averages got smaller. Also, from the blue 50-day SMA, mid-October 2020 to April 2021, the stock trading trended sideways. Now, I'm going to change the simple moving average curves to exponential moving average curves, EMA, where E stands for exponential. I am doing this because EMAs are more reactive to the latest price changes, making them timelier than SMAs. I'm also going to change the fast 50-day EMA curve to a fast 12-day EMA curve, and the slow 200-day EMA curve to a slow 26-day EMA curve. 26-day is relatively slower than the 12-day. I'm doing this so I can add and describe the moving average convergence, divergence, MACD, oscillator centered around a zero line, as opposed to an oscillator between high and low boundaries. The default inputs are fast length, which is the blue 12-day exponential moving average, EMA, of prices, slow length, which is the red 26-day exponential moving average, EMA, of prices, and a third line in the bottom section, the purple MACD line. The purple MACD line is calculated by subtracting the red 26-period EMA from the blue 12-period EMA. The MACD line is purple in order to reference its calculation from the blue and red lines. Blue and red together make purple. With view changes complete, this new view will be named the MACD line view. We see the window with two sections, the section with the price history line and the section below it, which shows a histogram divided by a zero line that also has the purple MACD line. I am going to provide some descriptions. EMA curves crossing each other and the MACD line crossing the zero line. At the bottom of the slide, look at the horizontal axis where the first week of April 2021 is. Going up to the top section, when the blue fast 12 EMA curve crosses above the red slow 26-day EMA curve, in the bottom section, the purple MACD curve is crossing above the MACD zero line. At the bottom of the slide, look at the horizontal axis where the end of October 2020 is. Going up to the top section, when the blue fast 12 EMA curve crosses below the red slow 26D EMA curve, in the bottom section, the purple MACD curve is crossing below the MACD zero line. Next, EMA curves relative to each other and the positive or negative sign value of the MACD line. At the bottom of the slide, look at the horizontal axis where you will find September. In the top section, in the price history line graph section, when the blue fast 12D EMA is above the red slow 26D EMA, in the bottom section, the purple MACD curve is positive. At the bottom of the slide, look at the horizontal axis where you will find March 15th, 2021. In the top section, in the price history line graph section, when the blue fast 12D EMA is below the red slow 26-day EMA, in the bottom section, the purple MACD curve is negative. Now, let's look at the bottom section and answer some questions about the histogram. Given the 12D EMA value is greater than and its blue curve is above the 26-day EMA value and its red curve, when the distance between these EMA curves are increasing in divergence, the green histogram bars are getting longer. The MACD line above the zero line is rising. A dark green vertical bar shows that day's contribution to trend was strong. A light green vertical bar shows that day's contribution to trend was weak. When the distance between the EMA curves are decreasing in divergence, the green histogram bars are getting shorter. The MACD line above the zero line is falling. Given the 12D EMA value is less than and its blue curve is under the 26-day EMA value and red curve, when the distance between these EMA curves are increasing in divergence, the red histogram bars are getting longer. The MACD line below the zero line is falling. A dark red vertical bar shows that day's contribution to trend was strong. A light red vertical bar shows that day's contribution to trend was weak. When the distance between EMA curves are decreasing in divergence, the red histogram bars are getting shorter. The MACD line below the zero line is rising. Let's put this all together. When the MACD curve is rising, that indicates an uptrend. When the MACD curve is rising and is above the zero line, that is a confirmed uptrend. When the MACD curve clears the histogram bars, that is an even better confirmation. MACD line, price line, and price trend reversals. If one were to see the price line trending upward, but the MACD line has trended downward into negative territory below the zero line, expect the upward asset price trend to reverse. If one were to see the price line trending downward, but the MACD line has trended upward into positive territory above the zero line, expect the downward asset price trend to reverse. Given the asset price trend in the top section and the trend of the MACD curve in the bottom section, the MACD curve usually has the better conclusion. To finish explaining the histogram, we have to add the MACD's 9-period EMA of the MACD line. That 9-period EMA of the MACD is called the signal line, which I will color black. That view will be called the MACD line and signal view. Here it is. In the bottom section, where the purple MACD curve crosses under the black signal line, the histogram bar height is 0. And then, as the MACD curve continues under the signal line, the bars turn from green to red. When the purple MACD curve crosses above the black signal line, the histogram bar height is 0, and then as the MACD curve continues above the signal line, the bars turn from red to green. In conclusion, the MACD oscillator helps investors see uptrends and downtrends better than moving averages alone. As we approach the time to close a trade position, we will use the MACD line and signal view to at least see we are not selling our assets when the MACD line is above the zero line and when decreasing green histogram bars are dark green or light green the prior day. Before buying an asset, look at a price chart with annotations for 1. The price trend, 2. The condition of its current price in reference to if it is above fast and slow simple moving average curves, 3. Whether or not the MACD curve is rising, flat, or falling, 4. Whether or not the MACD histogram bars are green and getting longer, 5. Whether or not the MACD histogram bars are red and getting pink and shorter, and 6. Whether the MACD line is above its signal line or has crossed above it. To the extent there is Bitcoin dominance above 35% moving the crypto market, And to the extent causes of asset price movements are important to us investors, let's look at reasons for the crypto crash of May 2021. Coinmetrics.io's weekly entry for its state of the network, Tuesday, May 25th, by Nate Madre, Senior Research Analyst, and the Coinmetrics team, gave data-driven insights and an analysis of the May 2021 crypto crash. The name of the number 104 State of the Network update was Bitcoin's Big Shift, a data-driven analysis of the May 2021 crypto crash. One must not only know about the assets in one's portfolio, but also the market one has to enter to purchase those assets. In the May 2021 crash of the crypto market, there was short-term capitulation, defined as the point in time when investors have decided to give up on trying to recapture lost gains as a result of falling asset prices. Are we going to give up on the assets selected for purchase in this course? Are you going to give up on assets purchased after buying them? Assets of your own choosing? When might one do this? Are the conditions for giving up in your written investment project, purpose and procedures document, IPPPD? For our investment project purpose and procedures document, we need to include when to give up on a stock or a crypto project, when it can no longer support reaching the set goal of its investment thesis, when it no longer meets other critical, original, and new selection criteria, when it is no longer competitively viable. Is its market opportunity still there? Does it still have leading market share? Are upgrades keeping its underlying technology score high? Is its financial health still very strong? And there are other questions that could be asked. When it is an exception on extension and still cannot meet its target or modified target by the deadline of the extension, not within its beta or standard deviation. Some stocks have choppy price histories, fluctuating up and down. Allowances have to be made for the amplitude of these ups and downs, the volatility of the stock. The primary measure of volatility is standard deviation, which reflects the average amount a stock's price has differed from the mean over a period of time. Standard deviation, capital S period, capital D period, can be a line chart added to one's view or study set under the price history line chart, which is often shown with open, high, low, close, OHLC candles, where sometimes the highs are the wicks above the candle and the lows are the wicks below the candle. Beta measures an asset's volatility relative to the volatility of the stock market at large. A beta of 1 indicates the stock mirrors the volatility of, say, the S&P 500. A stable stock would have a beta of less than 1. IBM had a beta of 0.26 in January 2022. The S&P 500 would have a beta of 1. A stock that can give you sizable gains and losses would have a beta greater than 1. NVIDIA had a beta of 1.98. Let's take the time right now and update our Lecture 4 Stock Data Trends Student Excel file to include rows for beta data under the 12-month price target section with a high-low average target price as shown here. We do see low beta is associated with low return. IBM has a beta of 0.26 and its High and low analyst estimates averaged only 2.93%. Amazon's beta was 1.02, while Nvidia's beta was 1.98, and Nvidia's target percentage is a bit higher than Amazon's price appreciation prediction. The industry beta for each stock is given for reference. Since we are looking for 12% appreciation on stocks, if the stock price immediately drops 10% below its buy price, please do not give up and sell the stock. Allow the asset to have its positive and negative risk, its positive and negative volatility. When setting capitulation prices, be careful of taking the next step of setting stops, automatic trades to sell assets, converting paper losses to real losses automatically. Because there are market actors who fish for stops. For example, option traders. I believe I can make someone sell to me a stock that drops to $50, or I believe I can make someone buy from me a stock that drops to $50. I owned a stock of a company. The price appreciation was great. The company's business was great. So much so, it became a mergers and acquisition target. There was an announcement that the company was going to be acquired. When a public company is acquired, shareholders of the company are compensated with cash for stock, stock of the acquiring company for the stock of the acquired company, or the to-be-acquired company, or a combination of both. The stock of the acquired company will no longer perform as a standalone entity. If I find myself in that position again, I would sell the stock within 3 to 5 days before the news sinks into the market. The acquisition is usually approved months after the announcement. I prefer to hold stocks of an individual company, not one that is transitioning. Is the acquiring company taking on too much debt for the acquisition? How long will it take for the new entity to digest the acquired firm? Will the acquisition benefit the acquiring firm enough to make me want to buy that stock? With cryptocurrencies, industry intelligence says, do not invest more than you can lose. This means do not sell an established, competitively viable cryptocurrency even if it falls 60% or more, if it is within its nature to do so. Having mentioned short-term capitulation as a reason for the crypto crash of May 2021, what were other reasons for the decline of the crypto market in May of 2021? Coinmetrics State of the Networks article explained, while selling pressure from China has been a large contributor to the price drop over the last few days, the sell-off was already in motion well beforehand. Elon Musk's tweets on May 12th about his concerns about Bitcoin's environmental impact sent an initial shockwave through the markets. Musk later clarified his comments by saying that Tesla had not sold any Bitcoin, but by that point the selling had already begun. After Tesla publicly announced a $1.5 billion purchase of BTC in early February, an incoming flood of retail investors helped push price to a new all-time high of over $63,000. But now, a lot of those new entrants appear to have exited following Tesla's about-face. Bitcoin would not be accepted for Tesla car purchases due to Elon's concern about Bitcoin's increasing energy consumption. Some people had jumped on, but were now jumping off the Elon Musk bandwagon. Much of the supply that was bought up over the last few months on a wave of Tesla hype is shifting into stronger hands. The article also says there was a liquidation cascade. For months prior to the crash, the crypto markets were propped up by record high levels of leveraged futures, not leveraged spot trades, but leveraged futures. But as Bitcoin's price dropped, a lot of that leverage quickly began to unwind. On May 19th, Bitcoin hit a liquidation cascade when price unexpectedly dropped below $40,000. When BTC hit 39, a burst of longs, people who hold for a long holding period, was liquidated, kicking off a temporary price spiral. With leverage, if price suddenly drops, traders may be left with an insufficient amount of collateral in their account to cover their leveraged position, which can lead to traders getting liquidated. This can create a sudden surge of forced sellers, which can lead to spiraling liquidations. If enough positions are forced to be sold, price drops, which leads to more liquidations. Back to when Bitcoin dropped below $40,000. As it did that, a large number of long contracts were liquidated in the range of $39,100 to $40,300. This led to a cascade of liquidations all the way down to the Bitcoin price of $30,700. The bloodbath began when the once $63,000 asset was only worth $33,500, close to $100 million liquidated. Liquidations finally started to stop when the price fell $2,700 more, from $33,500 to $30,700. Price approaching $30,000, it was time for price to bounce back. In Nate Madre's opinion, at Coinmetrics, this type of rapid deleveraging leads to devastating short-term price drops. But ultimately, clearing out leverage helps create a more solid foundation for future growth, since it wipes out a huge amount of forced sellers. Since the May 2021 crash, two of the biggest crypto exchanges, Binance and FTX Trading, reduced maximum leverage offered to traders. Last month, both capped it at 20 times, down from more than 100 times for each. Though they've moved to rein in the most extreme use of the strategy, they are far from turning it off. 20 times leverage is still higher than what's offered in standard U.S. stock market accounts. Earlier, I said Bitcoin does not hold its value well. Slide number 7. The price of Bitcoin dropped by more than 30% twice in less than 12 months. April to July 2021, minus 53%, and November 2021 to the end of the year 2021, minus 32%, and growing. Coinmetrics.io gave some insight into the May crypto crash. What about the price drop after November 8th that continued into the first quarter of 2022? We have to go back to 2013. Bitcoin China, BTC China, was one of the largest crypto exchanges in the world. In December 2013, China prohibited Bitcoin being used for products and services. Financial institutions could not buy or sell Bitcoin, which had then become illegal tender. These steps resulted in a Bitcoin price drop of 20%. On September 24, 2021, China's monetary authority, the People's Bank of China, announced that cryptocurrencies lacked the status of other monetary instruments and all business related to cryptocurrencies, including Bitcoin mining, was illegal. Cryptocurrencies had disrupted the controlled economy, contributing to crimes such as money laundering. This would exert downward pressure on crypto prices. Coinmetrics' Kyle Waters and Nate Madre wrote in State of the Network number 138, January 19th, 2022. The swift outflow of Chinese Bitcoin miners and the country's renewed crackdown on crypto activity has stunted trading volume on exchanges that have historically targeted mainland China customers. Russia. August 10th, 2020, Forbes published an article, Russia Backs Away from Total Cryptocurrency Ban by Roger Huang. It stated, starting January 1st, 2021, cryptocurrencies will be allowed in Russia, though they will not be allowed to be used in exchange for any goods or services. January 21, 2022, Barron's published an article, Crypto is in Turmoil as Russia Eyes a Ban on Bitcoin by Darren Fonda and Jack Denton. It stated, Russia may be adding to the fear that seems to be gripping cryptocurrencies. The country's central bank issued a harsh report on cryptocurrencies, including a potential ban on mining and trading. Owning or holding Bitcoin and cryptos by private Russian citizens may still be allowed, though Russia may be following in China's path in cracking down on Bitcoin. Both countries are also dealing with energy shortages and rising electricity prices. Russia's central bank said Bitcoin mining creates unproductive consumption of electric power. The coming tightening of the U.S. money supply in 2022 by the Federal Reserve, as per the December 2021 Federal Open Market Committee, FOMC, December 2021 meeting, with minutes released January 5th, 2022, also exerted downward pressure on the stock and crypto prices. But let's unpack that. With institutional traders and institutional investors, the crypto market is correlated with risk-sensitive instruments such as tech stocks. So, when the Nasdaq falls, the crypto market will also fall. Assignment 6. Finalize your purchase plan. Provide reasons for and against assets on your purchase list, and balance your picks to 100% against your total investment budget. 1. Create a document that lists at least 2 reasons for each stock or stocks and each crypto or cryptos you plan to buy in this simulation. Also, include the assets you regret not buying, listing at least 2 reasons you are not buying that asset. Determine if you will nevertheless have them on a watch list in some way. 2. Open the downloadable resource, the Portfolio Balance Spreadsheet, portbal.xlsx, in the assignment instructions. Save this document, then save it with a personalized file name. For example, portbal student. Modify the file to suit your needs. You may have a different list of assets to purchase. You may want assets to have a different percentage weight in your blockchain stocks and cryptocurrencies portfolio segment. You may have different places to purchase your assets. You may have a different amount of money for your investment segment budget. It does not have to be $13,000 if your total investment portfolio is not $100,000. Keep the blockchain stocks and cryptocurrency segment at 13% or less of your simulation's total investment portfolio. 3. Use TradingView or the charting platform of your stock brokerage firm and the charting platform of your crypto brokerage firm to see the 10-month price history line before you buy your assets, before the buy date for NVIDIA, Amazon, Ethereum, Polkadot, Bitcoin, Polygon, Solana, and any other asset of interest to you. Create your 50 and 200 SMAs view. For practice, create your MACD_line view and your MACD_line and signal view. One or both of them will be needed before asset positions are closed. Answer the questions in the assignment section of the course content for Lecture 6. This concludes Lecture 6. Finalize purchase plan and reasons for the crypto crashes of 2021. Lecture 7. Buy assets and the trading, targeting, and tracking spreadsheet is the next lecture.